All right, everybody. Stocks by the numbers. Welcome back. Friday. Wanted to look at SoFi Technologies real quick. SOFI on the Nasdaq. 694 a share, up 11 cents, 1.6% here on the day. Recently pulled back to 661. Had a nice bounce to this fib here, about 760. Now we've been kind of pulling back. If we look over here and we pull out like a 1 month chart, you can see it almost looks like we spiked up and then we're kind of channeling down. So we are potentially maybe forming a bull flag and we can pop back up to 7 plus. But also at the same time, it looks like we've kind of been in this long-term kind of descending wedge that's taking place. I'm going from the top here, December 27th, 23, connecting to that top right there, March 4th, 24, coming down. And then I went from, after the big spike up, I went to the big drop down. And you can see I drew the trend line from January 19th, 24, connecting through to March 19, 24, meeting up with that recent low about a month ago after earnings on April 30th, 24, and we can see the company beat nicely on the top and bottom line and did so 2 quarters ago as well. So overall, in my opinion, I mentioned that I like this company personally. It's showing really good growth here over the years. Market cap still sitting at about 7.33 billion. EPS right now minus 23 cents a share. However, the last 2 quarters, we can see the company posted 2 cents a share on EPS estimates of 1 cent a share. So now, not only have they, come in above those estimates, but also net income positive for the last 2 quarters. And if we look quarterly, we can see we were minus 5%, 7%, and now you can see the revenue consistently kept making the jumps higher to those next milestone levels, right? 607 million up to the high 600 millions. 756 million, then we jumped up to 871 million, and then above 900 million for Q1 of 24. And you can see the net margin percentage here, 5.5% and almost 10% for last quarter that was reported a couple of weeks ago. So now that the company is technically net income positive for the last couple of quarters, if they can maintain this type of business, then in my opinion, we're easily looking at about a $10 stock. If we look annually, we can see really good growth here going from the 1 billion mark to the high 1 billions in 22, closing out 23 at almost 3 billion. Now again, I understand they were still net income negative here. You can see net margin minus 10.33%, but now for the last couple of quarters, we're net income positive. So that's why, in my opinion, I think we're talking about kind of a different situation now. And if we look at 3 billion for last year, 7.33, right? So we're trading what, like 2.4 times annual revenue, which for a company, again, that is growing this nicely and is now net income positive, in my opinion, I actually think that's pretty low multiple. And we can easily take that to 3.5, which of course would bring our market cap to about 9+ billion, which would be roughly about a 40% move from, no, it wouldn't be 40%, but it'd be about a 30% move from the current market cap right now. So in my opinion, this stock, overall, the company's easily worth 9 to 10 billion market cap. That would translate to probably like a $9 stock, $10 stock. And that's why the last time we spoke about it, actually it was back here, right here in this channel, and I mentioned this trend line, it has to hold, and if it breaks, we can come down here, and I was looking for this key level at 680, and if you see here, you can see the low on this candle, 682, and then we popped up and rallied up to almost $8. So a situation like this, we do have these pops and these drops, and sometimes it does seem very short-lived, right? We had this long wedge taking place again over the course of like 5 months, and then the stock popped from like 6.5 up to 10.5. So in my opinion, we and Wall Street analysts alike probably see value here. I'm pretty sure we're all on the same page. And in my opinion, if I was able to personally step in on this stock, if I can get a price, if I can get a cost basis of sub 7, potentially even like 6.5 at the bottom of this range, in my opinion, you'd probably be pretty well set for future long-term growth. But overall, I do like the company. It is growing nicely, and that's why anytime I saw it dip down to like 7s and the high 6s, that's when I would try to just mention it in the Discord so everyone could just be aware of it, right? But we come down here, we can see the debt, right, was up here, 6 billion and change, dropped to about 5.33 billion Q4, and now for last quarter, 3 billion. So they essentially cut that, they brought that debt down by over 50%. Now we're sitting here at about 3 billion debt. So with the company, again, going net income positive for the last 2 quarters. So in my opinion, a lot of these metrics are heading in the right direction. We do technically still have assets outweighing liabilities. Total assets minus total liabilities yields total equity, and we can see we were holding about $5.5 billion for about a year and a half, and now we recently jumped up above $6 billion. Book value was up here above 5.5, dipped down to 528, and then started rebounding 536. Now back up to north of 5.5. And again, we're only trading a little over 1x book value, so that could be viewed as a relatively cheap ratio. Cost of goods jumped up, but obviously the revenue climbing nicely on that as well. Revenue minus cost of goods sold yields gross profit. We can see we went from $300 million and just catapulted up to the high 500s. Slightly pulled back here last quarter, but still sitting here at about $550 million. Operating expenses jumped up a chunk here to above $400 million, and the operating income essentially got cut in half. So again, this is what I always said. If there are one or two potential negatives on a stock, it could be used as the main catalyst to suppress the value of the stock, keep the stock down, and not show you those big explosions. But again, overall, in my opinion, over the long term, the stock should probably be fine. Price to sales here at 2.2. That's technically the lowest it's been going back the last 7 or 8 quarters. Price to cash flow, same thing, 15 times cash flow. That's the lowest it's been. Price to book now about 1.25 times book. We were up to almost 2 times book, then started pulling back a little bit. Enterprise value actually down here at $6 billion, surprisingly lower than the current market cap of the company, but our return percentages seem to be moving up over the last couple of quarters. Our gross margin percentage was 65%, down to 60%, but that's basically still kind of above par here for what we were seeing before the last couple of quarters. Operating margin, got basically cut in half, back to 16%. EBITDA got cut in half, and the net margin percentage turned positive, 5.5, almost 9%. Asset turnover basically flat, and obviously the debt ratio seriously started to come down because, again, the company started paying back that debt, basically cut it in half as of last quarter. But it's basically the stability of the stock, right? This is what I personally like about the company. They have just been on the up and up, predominantly coming in above analyst expectations. And you can see 1 miss on the EPS side over the last 8 quarters, 0 misses on the revenue side over the last 8 quarters. Annually, the company has been on target here, looking to get up to $2.4 billion for 24 and $2.79 billion for 25. So it looks like the growth is going to continue. EPS annual numbers coming in above estimates. Every segment growing nicely. And obviously we saw about 30% growth in revenue here from the US. And about 40% growth outside of the US. And if we check the forecast real quick for you guys, we can see here we're actually kind of mixed here with these analysts, with the analyst coverage here. We have what is this, 15, 18 total analysts watching the stock, 4 giving a strong buy, 1 giving a buy, 10 saying to hold, 3 giving it a strong sell. In my opinion, I'm really not sure if I'd agree with that, but obviously everyone's entitled to their own opinion. But if we do, again, potentially happen to pull back here to the bottom of this trend line, you can see we're looking at about 6.5, the high 640s potentially, and we could even meet up here with this fib level down here at 635. But in my opinion, if you're going to play the options game, I would personally always buy time just to be safe. Again, if you stepped into this stock here today, markets are closed Monday, right? So you have to keep that in mind if you're going to take an options position, especially in the short term, if you're buying for next Friday. But overall, if we're talking about shares, again, like I said, in the high 6s, low 6s, in my opinion, I think that's ideal. And the stock has basically held that level for about 12 straight months now. You can see we spiked up. And even though we came down to retest that 6th level, we basically, for the most part, have stayed above it. And this big spike up right here before we had the hard rejection after these earnings, this high on this candle right here, it was 654. So in my opinion, that could potentially be maybe like the next low of the lows here. I know I had like 658 drawn out. There was another fib here at 649 that I mentioned. But we can see we dropped down to about 660 and then had a bounce. So that's why if we do continue to make lower lows and stay inside this wedge, I mean, it may take potentially longer than expected, and we may not actually pop out until the end of July here when we get next quarter's earnings. But again, based on the history of the company's earnings, in my opinion, I'd probably give them the benefit of the doubt that they're going to beat there and could potentially pop up out of that wedge. So unfortunately, again, it could be a good short-term trade and you could see a pop back up to 7, make a quick profit. But even in the longer term here over the next couple of months, in my opinion, personally, I do think it's a buy. We switch over here on the weekly. We can see RSI basically middle of the road here at 44 and a third. Came down below this pivot point here of 869. 569, in my opinion, seems a little drastic. MACD, though, has been kind of steadily pulling backwards. We pull up the daily RSI, basically same level here at about 44 and a half. Tried to hold that 711 pivot point level and recently rejected and got back below it. So this is why I'm saying we could potentially pop back up to 711, maybe retest this 50-day, 724. But we can see here this pattern here of spiking up and then making these lower highs and then making these lower lows. So again, will it immediately, on Tuesday, explode up to 760? I have no idea. But overall, in general, it looks like the fundamentals are growing nicely, in my opinion. And of course, we have some potential technicals setting up for us in the next couple of weeks or in the next month or two. But 628 here, in my opinion, would potentially be an overreaction. But of course, if I like it up here in the high sixes, I would love it if it pulls back to 630, 6 and a quarter. However, the MACD did recently cross to the downside here recently. So that's maybe what's also helping to pull the stock down. And of course, the markets were red down a chunk yesterday, and now we kind of tried to rebound here. The Dow was red a little bit, came back up positive. NASDAQ and S&P holding steady. I know people are pumped about that NVIDIA beat. Nothing but good news across the board, high demand. So to keep stocks up and have this rebound, in my opinion, I can kind of understand it. But we know that anything can happen. And like we always say, this is why I say, in my opinion, definitely more beneficial to piece your way into a situation. And if you start to build a position here and markets do sell off or the stock does continue to pull back and all of a sudden you're down at 6.5, 620, of course, again, you can simply add to the position by not going all in, and you can keep that average cost consistently dropping potentially before the stock explodes, and then obviously you make out like a bandit. Let's check the Bollinger Bands real quick before I let you go. Okay, yep, bottom Bollinger Band here, 675, so of course that can happen, especially with the MACD recently crossing to the downside. We check the weekly real quick, and the weekly bottom Bollinger Band, 653. And again, if we look at the bottom of this trend line here, we're looking like 648, 645 maybe. So we could potentially be hitting about that 6.5 mark before we have that bounce up. But again, if we potentially see what's coming down the road, then this may be one of the better times to start building the position in the company. And again, we could go to the bottom of the range, but even starting the position here in mid-range of this potential descending wedge, in my opinion, probably the best way to play it. And that's pretty much it. So I'm going to end it there. Once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me, help you. More importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, they're very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thanks for stopping by. Enjoy your holiday weekend.